currency metal.
And when you say, because some people might be hearing this for the first time, when you say price suppression, you mean central banks suppressing the price of gold and silver to keep the dollar strong.
Well, to make it appear like the dollar is stronger, yes, absolutely. Because a rising gold price is an indication of a failing currency, and we are absolutely, I mean, there isn't even a marginal doubt in my mind, but we're at the end of this currency's, this fiat money big experiment. We're at the end.
So what can people do to protect themselves?
Well, you want to be as independent as possible. So my mantra is food, water, energy security, barterability, wealth preservation, and community. And the barterability, any talent you have or anything that's physical is a barterable skill. Okay? Silver and gold are universally barterable. Okay, but anything that you have that's physical or any talent that you possess is still barterable. And wealth preservation, you do it with gold, because the most important function of gold, why it evolved as the primary currency metal, is to hold and protect your wealth. Okay, that's its most important function. And right now in these insane markets, I think that is a very important function for it to perform. That's why central bankers and the 1%ers are accumulating gold, but why they also manipulate the price so that you don't.
Tony Blaylock, one of our regulars, asks if they bring money back to the U.S., would that create hyperinflation?
Well, if you're referring to the repatriation, actually we have to look at what's happening right now. Because we observed, I think last quarter, where I saw the monetary velocity start to turn up a little bit. So we need a little more time. I haven't looked at that, this week yet. But we're seeing some of those numbers that could indicate the start of that showing up in bond yields as well, and also in the weakening dollar overall. So, anything could really... See, here's the thing. All of that QE money printing was all hyperinflationary. It just hasn't yet been released.
Right. Injected into the system. Because how much money has been... It's like $12 trillion in 10 years.
Yes, exactly. And that's just the new money from the central banks. We aren't even talking about all of the derivative new money, and I think there's even more debt than that. So that's all hyperinflationary. It's just that it hasn't trickled through the whole system yet.
Monetary velocities kept it down.
Correct.
Okay,
but that could be changing, so we're paying attention to that.
All right, so Kevin T. Is the form the big reset takes purely a case of countries writing off their debts in worthless money, i.e. hyperinflation, or are there other ways?
Well, historically, they've never really found another way, so I'm guessing that this time, they have to get rid of that debt. They have to repay. They either have to default on it or they have to pay it, so... I'm thinking, no, they got hyperinflated away. That's what they're telling you.
Hyperinflation is how they do it.
It's how they do it.
Okay.
And they do that, and that part is like, you like in Venezuela right now, the markets are creating that, so there has not been an official reset, but you've seen spot gold down there go from like 169 bolivars to probably close to 2 million bolivars in a short period of time. So the markets can do it, but then also the central banks and the governments can do it. That's an overnight reset. So there's a couple different ways that, whether it's a forced kind of reset, the markets do it, or the central banks do it. Either way, you see spot will move pretty rapidly during that period of time.
Okay. Pete R. asks, how is the market, meaning the Dow, still rising. Do you think the market could correct or crash?
Well, first of all, yes, at some point I definitely do think so.
Yeah,
but
typically every 7 years it's happened, so we're overdue.
Well, but there's been nothing real about these markets
Right.
since 2008. So, shocker. Sorry, but I mean, seriously, shocker. The problem is the higher the markets go, the more rigid they become. And we've been talking about going into the melt up phase since October. I think that's when I first started using that term here.
Right.
But now you're hearing that pretty much constantly whenever you're listening to, CNBC or Bloomberg or any of them. And they're also starting to talk about the melt-up phase. So money in the sidelines, a lot of greed, pushing the markets higher, all of that money coming back, repatriation, even some of the corporations announcing how they're going to share and give raises to people. So this could all very well be quite stimulative and could push the markets higher for a minute. But
so those are all
it's not
factors of the melt-up.
Gravity.
What you were
Right.
saying there. Reason I say that is because we had another YouTube viewer, Susan M, asked if you could talk about the melt-up. What's happening? What does it mean? And so I wanted to make sure that Susan, you knew that I was going to ask that question, but she just basically described how the melt-up is working, right?
Right.
And so she also says, how do you think it will end? Well,
badly.
Yeah, it always ends in some kind of a major correction.
Absolutely, because everything is so severely overvalued. Not saying these valuations can't be stretched more. I expect them to be stretched more. But I know that what comes up must go down. And I was there in 87. I know what that looks like and smells like too.
Mm-hmm.
So the problem is 87, this was happening into a bull market, and they still had a lot of tools that they could create because that was the beginning of this phase of it.
Meaning the tools they could create, meaning the central banks had more tools to fight it.
Correct.
Whereas now she talks about that they're running out of tools.
Exactly. And they are out of tools. So everything is extraordinarily experimental at levels that historically have never taken place before, nor has any of the stimulus ever been removed before.
Mm-hmm. Well, and this is why you always, to take it one step further, is why you always talk about the next phase of the plan is go cashless, make us go cashless.
Right.
So that then they can impose negative interest rates.
And attack principle.
To force you to spend your money to create the inflation that they want to create.
Right.
Because they're running out of tools. So that's the next tool that they've kind of declared.
Right.
That, hey, this is where we're going to have to go next.
Exactly.
Okay. So Matthew M asked, David Morgan pointed out that silver does well specifically for inflation and gold does well specifically for deflation. Why does one metal outperform the other in a given monetary settings?
Well, actually, gold performs well in both inflation and deflation, so I might differ with David just a little bit in that regard, because both of them, their primary function is to hold the value.
They definitely tend to track each other going up or down over long-term movements.
Over long-term movements. Silver, because it's so less, it's less expensive, so that has a tendency, and the contracts are a lot bigger, per ounce, so that has a tendency to be more volatile.
Mm-hmm.
But, gold is really the foundation of wealth.
Okay. Okay, so Brenda D asks, on a recent video, Lynette, you showed the numismatic coins you buy and indicated you bought them for different reasons. Mm-hmm. So, just briefly, what reasons?
Okay. Well, okay. In the plan that I'm executing for myself and for my children, one of the things that we have are some mortgages. So like really higher population coins, which I would classify as a protection with a pop of growth. History has just shown that that performs best for paying that mortgage off after we get the formal reset. And so I would accumulate those to pay a mortgage off. On the other side of it, though, like one of my daughters is a surgeon. And so my intention is to buy a medical plaza, which she'll then she'll head up.
After the reset.
Right. Well, during it, while it's happening, right? When all of the fiat money inflation is blown out of the real estate, and I can see that cup formation, happening, kind of like what we're seeing, a possible cup formation happening in the coins again right now.
Right.
Well, we'll talk about that, maybe in the next video or something. I'll show you that pattern. But, yeah, when we see that, then I intend to convert some of my lower population coins into that commercial real estate, either direct, or I might have to convert some to dollars to do it, etc. So in that case, I want a higher quality, so I'm carrying more wealth in a smaller package. And then some of it I do that has a very low population, and while I could use it for anything, my intention is not to, but rather to pass that down from generation to generation. So it depends on what I'm trying to accomplish, and also where I find the best deal. Because if I've got, the same price for a coin, and this one has a higher population than this one, I'm going for this one.
So basically, there's different categories of how the coins and what they should be used for, right? And that's what she kind of just hinted on. So Brenda, if you want to know more about that, or you want to have a strategy built specifically for you, that's what we do here. Just give us a call.
Right. And
we have, spreadsheets that we utilize to take all of the information that you have, your goals and objectives, and then we can create a plan for you that's specific, that's tailored, that was actually built by Lynette.
Yep.
And any one of our team members here can do that for you.
Yep.
All right. Eric B asks, with conditions similar or worse compared to the period prior to 2008, what is your recommendation for money accumulated in 401ks? Tough, because you're kind of stuck in there.
If you're currently contributing, then you are probably likely to be stuck in there unless you can do what's called an in-service withdrawal rollover election. Roll part of it, usually up to 50,000 or 50%, whichever is lower, into a traditional IRA, and you'd have a little bit more control.
But it still totally depends on what the plan offers you, right?
Yeah,
and
whether
even
or
in
not
the
you
traditional
can.
IRA, what plan you're in and what it offers you. You have to do some real good due diligence.
Well, you do, but if you're in a traditional IRA, then you can take a distribution and pay your taxes and your penalties if that's applicable to you, right?
Whereas you can't on a 401k or locked.
Right.
You could take it in a loan, though, right?
Maybe, if it's written into the documents. So you have to see what you have the ability to do.
So, if you were locked into a 401k, you could... it's not going to protect you during a reset. But if we just saw a market correction, something like mining stocks or something like that could maybe perform well inside of a market correction.
Well, no. When in '87, I can tell you, even stocks that were like Hawaii Electric. I loved Hawaii Electric for what I figured. Hey, it's a monopoly, Hawaii, whatever. Really good, strong company, and yet when it went down, when the markets went down on Black Monday, so did Hawaii Electric.
Yeah.
So there really is no protection from, and especially this next market meltdown, this won't be a normal one. These markets cannot correct back 4%. They cannot correct back 4%. And there are no, the other big huge difference, and people just don't get this. They think that they can buy and sell these things whenever they want to. But you have to have somebody on the other side when you want to sell, somebody that wants to buy it on the other side. And the market makers, whether it's in the treasuries or it's in the stocks, they're 70% less than they were when this crisis hit. 70%. There are no market makers anymore.
Well, and that's why prices drop so dramatically when the market starts to fall out, because there's no demand, so people have to keep dropping their prices more and more and more and more till somebody will buy it.
Right. And up until 2008, that was the job of the investment banks. Okay, was to make a market, so that to create that floor underneath, especially the plunge protection team created after 87. But in 2008, banks no longer trusted each other. So that's the piece. That's why, I say, wherever your wealth is, when this next crisis, financial crisis hits, that's where it's staying. It's not going to go anywhere else, because there's nobody on the other side of that trade to buy it. There isn't, period. I mean, if you're in the system.